probably somebody you will have heard commenting on mortgage funding. Mortgage funding is obviously a big issue for us at the moment, and Ray, we're very interested to hear what you have to say. Thank you.
Thank you, Guy, and thank you for inviting me to speak at your conference today.
I was asked to come along to basically give the delegates an outline of what's happening in the mortgage market, where we were a few years ago, obviously more important where we are now and where we're likely to be going. So it's a look at what's happening now, what's likely to influence the market over the next few years. I think what is going to be the biggest factor in the market over the next few months is the way the Eurozone sovereign debt crisis develops, because we're already seeing that banks are afraid to lend to other banks. Similar situation to what happened after Lehman's went bust. The short-term money market rates, London Interbank Offered Rate, that's been edging up over the last few weeks, whereas normally in a situation where the perception is that bank rates are going to stay at 0.5% now for 2 years, compared with what, as recently as March, a lot of economists were forecasting a rise within 2 months. And in that sort of scenario, you would expect in a normal market the wholesale rates to actually edge down. The fact they've gone up is a reflection of the fact that banks are just afraid to lend to each other because they just don't know which banks are going to be taken down by this crisis. That, I think, will restrict the availability of mortgage finance, and that lack of or reduced competition is likely to mean that at least variable rate mortgages edge up in price over the next few weeks. Worst case scenario is that we get a major banking problem, and it's not clear yet whether that's going to happen or not. But if that does happen, we'll then see a further contraction in mortgage finance. Criteria will be tightened. The first casualty is likely to be people who need a high loan-to-value mortgage, but the reduced competition will mean that everybody has to pay more. I mean, in terms of the future of auctioneering, I can only really comment on the property side because I don't get involved in chattels, but auctioneering has always been an important part of the property sector, and I think it's absolutely important that vendors who want to sell have a choice of selling in as many different ways as possible. There are, of course, more choices today than there were a few years ago because there's the internet, which opens up a whole load of other avenues, and different routes to market will suit different vendors depending on what their priorities are. So I think having a wide choice of options, including clearly the auction market, is always going to be important to the property vendor.